All right, guys, well done. Well done. Fantastic job today. What a beautiful breakout pullback. If you watched last night's video, hope you guys made some money on that today. Now, boy, the charts look fantastic right now. We got FOMC coming tomorrow, and I have three, I think, pretty simple clues that are telling me where the winning trades are going to be for tomorrow. And by the time we're done tonight, as always, you'll have a roadmap to make some money as well. Before we jump in, though, and talk my favorite trades for Wednesday's FOMC day, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these lessons, if you like these videos, hit that like button for me. Give me a shout out. Give me a hell yeah down in the comment section below. Thank you so much for tuning in, sticking around tonight. We got FOMC coming tomorrow. Let's go find some more winning trades on FOMC Wednesday. Charts are all ready to go. As you can see, Nasdaq triple Qs are ready. The E-mini and the SPY is ready. I'm glad to see you are ready right along with me. I see three important clues that are telling us pretty much exactly where the winning trades are going to be on FOMC Wednesday. One of those clues is right in front of us on these 60-minute, these hourly charts. It is very easy to see right now the E-mini and the SPY is bullish and rotating inside of this channel. The Nasdaq's a lot choppier, but you can definitely see Nasdaq overall right now bullish into a trading range and rotating off the low of this channel. Bullish bias on the 60-minute time frame. That will tell us the best direction, the best odds of success tomorrow. Now remember, we're not going to trade off the 60-minute chart. This is just one of the three important clues for tomorrow. There are two more, I think, even more important clues on our tick charts, and we'll talk about those two clues and the entry tactics for tomorrow in a moment. Before we jump into the tick charts, though, let's double check our schedule for tomorrow, because tomorrow is not your average Wednesday. Tomorrow is FOMC day, and of course, everybody is obsessed with the FOMC right now. When will they begin cutting rates? Will it be June? Everyone seems to think it's going to be June. We're going to hear from Jay Powell tomorrow at 2 o'clock and that 2:30 press conference. Now, FOMC day is a lot like a Friday. My mindset on FOMC day, I want to get in early when the markets are good. I want to take profit early, remove risk early, and kind of buckle up for the fireworks in the afternoon. I'm not a big fan of gambling around the FOMC announcement, so my entries, anything after 11:30, 12 o'clock tomorrow, I consider to be a gamble. So my job tomorrow is get in early, remove risk early, take profit early, grab some popcorn, listen to Jay Powell. We'll come back tomorrow, obviously, and we'll trade what is usually one of the best days of the month, the day after the FOMC, when all the pros come back and put their money on the line. But first, though, let's find out where the best entries are for tomorrow. Our window is much smaller tomorrow morning. Let's now talk about my favorite trades here for tomorrow. That way you guys have a game plan to make some money as well. S&P is ready. Nasdaq's ready. Let's go into the S&P and the SPY first. We'll wrap things up tonight, of course, as always, in the Nasdaq and the triple Qs. I mentioned earlier there are three important clues right now. One of them is this overall bullishness, our directional bias on the 60-minute. But again, we don't trade off the 60-minute chart. In fact, we don't trade off time charts either. I like to trade off tick charts. I think tick charts make everything easier. This, of course, is a 7,000 tick chart. You'll see linked up there in the upper left-hand corner. And if you're watching for the first time right now, this is the 21 EMA. It's pretty much the only indicator we need to find lots of winning trades every morning with the students in our morning trade room at 8 o'clock Eastern time. There are two more important clues on this tick chart right now. One of them is this big move higher we saw today after that gorgeous breakout pullback. Who could have ever seen that breakout pullback coming? We talked about this last night in the video. I got a bunch of emails from you guys. Good job on that, making money. Not getting fooled down there and trying to get short. Anyways, most important thing though is whenever we have a big move in one direction, I do not want to buy high. You can see looking left, but right around some prior areas of resistance. I do not want to buy high right now. I want to buy low. Anytime I see a big move like this, I always look for a two-legged pullback and a retest of that high. A two-legged pullback and a retest of the the high. That's one big clue on the tick charts. The second clue we see here on the tick charts, there's two ranges. Once again, there's a range right there and a range right here. Now, if you watched last night's video, you know that anytime we see a range and a breakout, we always love to look for a breakout pullback, right? Off the top of that trading range. Might this be a two-legged pullback into the area? Boy, wouldn't that be nice for us tomorrow morning? The second range, though, the second range is a pretty important part of this. This trading range is what we call a directional range. It's a strong move up, big move up into a trading range. The most important thing, there are two things you want to think about when it comes to directional ranges. One is that ranges are magnets and they love to rotate back and forth. We're an overall bull market, so it's obvious buying low, selling high, buying low, selling high. We'll talk about how to time the entries on this as we go. But that's one thing I'm thinking about right now with that trading range. Another thing, too, is that, tomorrow's FOMC day. You may not be aware of this, but markets, they love to flutter and float higher into FOMC. It's kind of one characteristic, very distinct about FOMC days. We may end up floating higher, and anytime we see the market break out of a trading range, you know this, right? We're looking for that breakout pullback, right? So the second aspect of that short term, that most recent trading range that we have in front of us. So now, let's put all these clues together. We're bullish on the 60-minute. It's a big move higher, and we have two trading ranges. My favorite trade for tomorrow is definitely going to be that two-legged pullback and the run right back up again. We'll talk about, there are probably 3, maybe 4 different variations of this, because obviously I don't have a crystal ball. I want to give you guys some different strategies to time the entries on that two-legged pullback. We'll talk about that in detail in a moment. And again, because tomorrow's FOMC day, we may end up fluttering higher, and I want to talk about that a bit later on here in the video. Let's talk first about the two-legged pullback, though. Because the two-legged pullback is always my favorite strategy after a big move like this. Now, when I say two-legged pullback, if you're taking my free video classes right now, we talk about measured moves, right? And measured moves are symmetry, right? So 100%. So think about a symmetry, right? A measured move. Usually a two-legged pullback in a bull market like this will get underneath the 21 EMA, and I want you to think about going a little bit more than a measured move, right? It'll go a little bit more than that 100% extension. Again, if you take my free video classes, this should all sound pretty familiar. So I don't know exactly how big that two-legged pullback will be yet, but I know what to look for roughly. Now, once I get that pullback, I don't know how far this will go. It might hold here, it might hold the channel, it might go all the way back like today, right, and then bounce back up. So I don't know how far that pullback will be. What I do know, though, is it's an overall bull market with a nice big move higher. And if I can get one of those failure patterns you talk about in the free video course, let those bears try once, let those bears try twice. If I can trap in some rookie traders, this is a horrible place to be selling, right? It's a horrible place to be selling as we go lower, not an overall bull market. If I can trap those bears in, I can then use their stops to squeeze those stops and fuel that move going higher. So think about, again, that two-legged pullback, bit more than a measured move, get down into support, somewhere down in this area. And again, I wish I could be more specific right now. We'll know more tomorrow in our trade room, and use those stops to fuel that move going higher. Now, there's probably more money to make as we go higher here. And to do that, I'm always looking for one specific type of entry pattern, and it's called a bear trap. Now, bear traps are really, really simple patterns, but you got to learn them. It's a higher high in price and a move just below that low. So one of my favorite sequences for tomorrow is to buy that two-legged pullback. But again, don't pick the bottom on it, right? Let those bears get trapped in. Let them get trapped in here, right? And then squeeze those stops back up again. It's a two-try failure pattern we talk about. We teach this in the free video classes, and of course, followed up with that bear trap, that higher high in price, and that bear trap below. Take some profit off at the high, leave that runner, because we know that ranges They love to rotate. The amount below the range can be projected above the range, and that will give you some nice juicy targets. Hopefully we'll get that early tomorrow so we can leave that runner into the FOMC announcement. Now, pay attention here. Pay attention. We oftentimes will see what we call a double bottom reversal. Got a beautiful one of these on the Nasdaq today. If we get that two-legged pullback, we may have a pretty easy job here at trapping those bears in once and twice and getting that run going higher. But every once in a while, the underbelly of that trading range will hold. The bears will shoot this thing back down. They'll retest the low, and we can do it again. Don't chase it going lower. This is not a reversal, right? It's an overall bull market. But once those bears who sold short on the breakout pullback of that trading range, once they take their profit at that low, in come the rookies. Bears once, bears twice, trap them in with that two-try failure, and then as we go higher, look for that simple bear trap pattern, that higher high in price, and that trap below that low. So don't be afraid. We oftentimes will get that first one-to-one target, remove the risk on the initial entry. For whatever reason, they hold the underbelly of that range. They retest the low. And again, it could be here. It doesn't really matter. Once they retest low, though, trap those rookies in. It's an overall bull market. Trap the bears in twice. Use their stops to fuel that move. And I know a lot of you guys love these bear traps, right? Grab that bear trap on the way back up to retesting that high. All right, let's slow down for a second, because I know most of you guys and gals watching right now, you've learned all these patterns, right? You've taken my free video classes. You've learned failures, you learn traps, double bottom reversals like this. But if you're watching for the first time right now, this might be a brand new language for you. But don't you worry. I teach all of these entry patterns. I have hundreds of examples of failures and traps, double bottom reversals, and everything between. I teach all of this in my free trading classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up and take that free trading course, because the strategy I teach in that video series will show you a simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. Then I want to help you start making money on your own. I'll teach you 4 of my favorite entry patterns. You'll learn failures. You'll definitely learn traps and a whole lot more. If you're not making consistent money right now, if you're missing the best trades each day, if you're struggling to qualify for a funded account at Apex or Top Step, hit the link up top there. Take that free trading course. It's perfect for someone trying to make the jump into full-time trading. Hundreds of examples I will talk about here tonight on the video. And by the way, too, if you can't go to the link up top there, I'll put all the important links we talked about tonight, the description of the YouTube video, put the free class links down there. We trade together every morning in our trade room. I'll put trade room membership links in the description as well. How about Twitter, too? I post a lot of charts and updates on Twitter during the day. If you're on Twitter, give me a follow. All the important details down bottom in the description of the YouTube video, and that will teach you more about the pattern setups and the entry tactics I'm talking about tonight on this video. So now we know that two-legged pullback. We know how to trap the bears in. We know how to leave the runner. We also know if it runs up and retests, we know not to panic, right? To do it again, right? With that double bottom reversal. Now, as you can tell, I love to trap traders on the wrong side of the 21 EMA. It's one of the easiest ways to make money. But you know what, though? Sometimes we get that two-legged pullback. Sometimes there's so many buyers down here, this thing just boing and runs right back up again. Sometimes we don't get the chance to trap those bears in and squeeze those stops. Sometimes it V-bottoms off that low. These are very challenging on our emotions, and it's very easy to lose money if you don't have a game plan for it. If it pops off of that low, what will almost always happen is it will begin to grind and go higher. And that grinding motion is the giveaway. What happens is that grinding motion means the bears are walking away and price is just kind of floating as it goes higher. Now, if you're anything like me, when this thing starts to grind higher, that little voice in your head is going to say, come on, man, man, get in. You're going to miss this. You do not want to chase these running higher, because what happens is when it grinds up like this, these are sellers getting out. Eventually, buyers are going to want to get back in, and when they do get back in, they're not going to want to buy high. They're going to want to buy low, and to do that, they're going to go out, draw a new bull channel off the highs, and then watch closely here. Very, very important. Look left. Find one of those prior swing lows, and my favorite entry is right below that prior swing. That's where traps live. I can get below the 21 EMA, use a failure pattern right off the 21 EMA, a failure into pullback, a failure into bear trap. And again, once you take that free trading class, this will all make a lot more sense on this. The bottom line is I want any of the entry patterns you guys are learning, traps, failures, pullback combinations, trap combinations. I want any of those entries off the first test, off the low of that channel. And again, remember, where does the market want to go? It wants to go back to retest the high. It wants to pendulum swing right off of that low. So keep it in mind for those runner targets. Now, one more thing here, actually two more things here. I want that deep pullback, right? I want the deep pullback. But you probably noticed right now, there's a trend line right there. There's a pendulum swing right there. So what do we do if all we get is a shallow pullback right now? I want a deep pullback. It's a big move up. I want a deep pullback. But you know what? Sometimes we don't get it. And remember, there's no money to make in making predictions, right? I'm not here on this YouTube video to make predictions. My goal is to get myself ready and get you ready with a game plan to make money no matter what the market throws at us. Making predictions is almost worthless because it only gives you one chance to make money the following day. I'm going to give you guys some variations, different ideas, things I'll be watching for tomorrow morning in my trade room, right? So if we get a shallow pullback right now, what's the problem? The problem is I'm not buying very low. Right, that's the problem, right? If I'm not buying low, the buyers, right? Buyers are waiting down here, right? Buyers are waiting down, right? They're waiting to buy low. If we don't go low enough, we're not going to have enough big money buyers down there to bounce this thing right back up again. In that case, I need to trap in sellers and use their stops to fuel that move going higher, because I'm not going to have the option to rope in or to recruit more of the buyers who are waiting for that deep pullback. This is where we buy shallow pullback traps. Bears try once, bears try twice. I need to buy as low as I can. And to do that, I'm going to use a trap pattern. So we may end up rolling lower, holding off some of these support levels, and then running higher here. And as we go higher, I do not want to buy high right now. Again, I'm into resistance. I'm way high up right now. But I will look for, again, bears once, bears twice, and get underneath that prior swing. Notice the difference between these two patterns. This is a bear trap pattern, right? It's a higher high in price, a trap below low. If I go lower, I don't have to worry about buying too high. In that situation, it's one, it's two, and we can buy into those stop losses. Very important you realize the difference in those two types of entry patterns. One of them, the bear trap, gets me in at the lowest possible price. The one below, I can be a lot more aggressive with because I'm not worried about buying too high, right? That's a very important thing to understand on the difference there. And then last thing here, I'm sure a lot of folks are wondering, okay, Joe, if we're getting that deep pullback, could I sell this? Right? Could I sell this? How could I short this thing going lower? Well, first of all, remember, you're going against the overall momentum and the 60-minute time frame, right? So right now we're bullish in the short term and bullish in the long term. So anytime I go against that directional bias, I always want to go small size, quarter size, half size, save your best bullets for the best entries. There are two ways I can sell off the highs. Bottom line, I always want to sell as high as I can. And to do that, I'm going to use what we call a bull trap. There are lots of ways in which we can use bull traps to sell during that pullback. The most common way is a crown reversal pattern. It's very simple. We may try to go higher. The buyers may struggle up here. Again, I do not want to buy high. I'm open to the idea of buying a breakout pullback, which we'll talk about here in a moment on the Nasdaq chart, but I'm not going to buy right here, right now. We have to see more proof going higher. So if I start seeing buyers trying once to keep it going higher, right? These are rookies up here, right? These are not professionals buying high. If they pull back and try again, it's a lower low in price and a move right above that high. Now think about what's happening now. Now all the buyers are committed. So if I see a strong red candle right now, all those buyers who are in, their stops are sitting right there. Right now, I also have to be careful too because I have to sell as high as I possibly can. I do not want to sell as we go lower. Why? Because who's waiting down here? Buyers are waiting down here, right? I have to be short on this. I have to be in the green on this short trade on the way down. I need to be at least good, well in the green there. That way, if we do run back up again, I've already get the money out of that trade on the way down. We need to get those bull traps or those crown reversal patterns to trap in the buyers and then sell as high as we possibly can. Because again, I do not want to sell as we're going lower because who's waiting down there? Bulls are, right? The buyers are waiting down there and to buy it right back up again. That's the way we sell off the top of a range, right? In an overall bull market. Let's keep going though. That's the plan for us as we go lower. This will also apply, of course, to NASDAQ. The NASDAQ is very similar to the S&P right now. Everything we talk about tonight on the S&P can pretty much be applied to the NASDAQ. Over now on the NQ and the triple Q 60-minute time frame, I realize the NASDAQ's been a little bit choppier lately, but there's no doubt about it. We're definitely still an overall bull market. And like I always remind you guys, don't stress out. Don't overthink the 60-minute time frame. And don't even waste your time on daily charts or weekly charts. If you're a day trader, find that 60-minute direction, and let's drill down now to our tick charts. A beautiful example there, once again, right, of that strong run down, that double bottom, right, trapping in and going from there. A fantastic example of that double bottom pattern we talked about last night on the video. We have the same exact clues right now on the NASDAQ. We have a range breakout. I would love to get that for a breakout pullback. We have this trading range right here, right? So same thing. Think about range, rotation, breakout, pullback, and again, it's a big move higher. Think about that two-legged pullback and that retest of that high. We just talked about the price going lower and a bunch of different ways to buy it and one bull trap to sell it as we go lower. Now, what do we do as we go higher, right? The good part of the NASDAQ is the NASDAQ has plenty of space up here until we run into that overhead level at 18,381. What you want to think about whenever we have a breakout pullback is you want to think about two very specific patterns. As we go higher, if I start breaking out going higher, I always look for bear trap patterns to buy as low as I can during the breakout. Remember how that works. It's a higher high in price and a trap below that low, right? Then I wait to get what was resistance over here. Let's take this right now, copy that right there, bring that up here, and this, of course, now becomes an area of support. So think about a breakout pullback right now. If we break out going higher, we've got room to go. If I can get that higher high in price, get that bear trap below that low. Right now, once I start getting that breakout and once we start getting up into overhead levels of resistance, we'll take some profit. We're not going to buy way up there. Now we look left, we go back and look at the prior highs of that trading range, and this area now becomes a really valuable area for that breakout pullback. Now what I do is on these is I'll draw a trend line off these highs. I'll bring it down around that low. I'll look left to combine that high like that and look for a way to combine those areas as an area of support, right? Makes sense? Now, the way you time the entries on these is we don't pick the bottoms. Okay, we don't pick the bottom on anything, right? For all I know, it'll hold resistance and roll all the way back down. Tomorrow is FOMC, right? Don't forget, anything is possible the later we get in the session. But if I can pull back to the top of that trading range and I can get underneath that 21 EMA, this is exactly where that same bears try once, bears try twice. You will soon learn to love trapping traders on the wrong side of the market's momentum. right? We're bullish overall right now. In this example, it's a strong bullish move going higher. I would love to get that bear trap going higher, right? Shallow pullback, higher high in price, the trap, and then look left, find those prior areas, right? Find those prior areas of resistance, use them now as support, wait for the pullback. It may keep dropping. We'll talk about that more in a moment. But if we get the bears struggling right there, if we start seeing the high of that range hold, bears once, bears twice, now we got you. Now you can't get out without a loss on that. Bears get trapped, we squeeze going higher, and now we know that bear trap pattern is the follow-up trade from there. Now, one cool thing about breakout pullbacks is the size of the breakout is a measuring leg. So the size of that breakout can be then projected off of that low and used for a target. Make sense? The size of that breakout, when I pull back like that, the size of that breakout leg can now project going higher, and that gives me an easy target. If you want to make more money, don't trade more often. Get better at holding on to your winners. So you definitely want to think about, as we go higher, that bear trap going up. And then as we get up into overhead levels of resistance, we're not going to keep buying. We take some profit up there. We wait for the pullback, and we trap the bears in, right? We trap them trying to get short here right now. An overall bull market, bears once, bears twice, use their stops to fuel that move going higher. And again, into that bear trap pattern, the technical bear trap, right? As we go higher, back up to retest that high. That is how I like to look for those breakout pullbacks. Now, what if we end up going higher, right? What if we run higher, but all of a sudden we're not continuing, right? All of a sudden now we get the buyers coming in and they start struggling, right? They try once, they try twice. This is that crown reversal pattern I talked about earlier, right? That crown reversal. It's buyers once, it's buyers twice. Can we all agree this is not a good spot to be a buyer? I know we're overall bullish, but I would much rather either wait for evidence of a breakout and then buy the pullback, or wait to buy nice and low. I always want to buy low. So as we're going higher here, if we go higher here and the buyers start struggling once, lower low, twice, get that lower low in price and that trap above that high. In the free video class, we talk about the entry signal on this, that red candle closing below that moving average, and bam, right back down again. Don't forget, the amount we go above the range can project down below the range. That will give you your target. And more importantly, it also tells us now, trap those bears in again. The same game plan we talked about on the S&P a moment ago, it can also be used here on the Nasdaq, right? It's all the same stuff, right? It's that rotation back and forth, that two-try failure into that bear trap pattern, and right back up we go into that trading range. That would be a fantastic sequence for us tomorrow morning, and hopefully we'll get it earlier, right, rather than later into the afternoon. One more variation of this I want you guys to be aware of. We may end up popping up and getting that V-top. V-tops happen every once in a while. So if we end up rolling higher and all of a sudden this thing gets whacked back down again, again, bunch of resistance up top there. If we run higher and we get whacked right back down again, watch for that same pop and grind I mentioned earlier. I talked earlier about a pop V-bottom, right? Like that. Remember that pattern from earlier in the video, right? Same idea, right? If we go higher and we get whacked back down, again, tomorrow's FOMC, so you can be ready for everything, right? If we go lower now and grind back down, all we do here is we mark off that trend line off that low, up around that high. And remember, when I'm trying to sell short in an overall bull market, I always look for that bull trap, right? Always look for that bull trap entry, because again, I do not want to be selling as we go lower. It's one thing you cannot do in an overall bull market is sell as we go lower, because again, there are buyers waiting down there to take your money. I want to sell as high as I possibly can, and there's one way to do that is to find a bull trap. I want to be in the money on that trade by the time we take off to the downside there, then I take my profit, trap the rookies in, and right back up we go. So keep an eye, right? Keep an eye on that V-top, right? That V-top reversal off of that high. All right, I'm getting excited about this, just talking about this right now. FOMC day tomorrow. Remember, early in, remove risk, take some profit. The game plan is all set now. Don't forget, tomorrow morning, 8 o'clock Eastern time, come trade it with me. We cover a lot in these videos, but the easiest way to start making consistent money in the markets is to learn and trade along every morning at the opening bell in our trade room. I'll put all the important links in the description of the YouTube video, the free class links, the trade room membership links, the Twitter feed links. Any questions, comments, concerns, don't be afraid to call the office or use live chat. If you want help, need help, we're here to help out every step of the process. Guys, thank you so much for tuning in tonight and watching all the way to the end. Get out of here. Enjoy your evening. I will see you sometime soon. Hopefully trade with us in the morning trade room. In the meantime, be well. Be nice to each other out there. Kick some butt tomorrow on FOMC on Wednesday. Adios, amigos. Bye-bye for now.